Hello again, everyone. In this technical analysis of the stock market video, I call it exhaustion because I believe the market is getting exhausted. It is continuing to pull back, but on weaker and weaker legs. And we're going to talk about that here in a minute. We're going to look at the Nasdaq Composite. The Nasdaq Composite and the Nasdaq 100 have both have very deep retracements of the first wave down. Then I want to look at the put to call ratio from the Chicago Board of Options Exchange, equity only put to call ratios. And then I want to look at gold. All right, so the Nasdaq Composite was up 141.66 on Friday, continuing this trend that it's been in. And we'll look at the wave structure here in a minute. For the week, it was up 516.37, closing very close to the high of the week. All right, so what have we got going on in here? Okay, so here's the wave count. I've got it as wave 1 down and wave 2 pullback. We've retraced almost exactly 78.6% of the move down. And that is a deep Fibonacci retracement, but not out of the ordinary. I mean, you usually target 50 to 61.8% for a wave 2, but a wave 2 is valid all the way back to the beginning of a wave 1. It just can't go beyond the beginning of a wave 1 or it's not a wave 2 anymore. All right, so what am I talking about here? I'm talking about advancing versus declining issues on the NASDAQ. So what I did was I looked at only the positive breath days, okay? So naturally on the first kickoff, these first 3 days in here, the 3-day average was 4.32 to 1 to the upside, advancing over declining issues. Then in the next push of a 7-day push of positive breath, and again, I'm ignoring the negative breath in here. The 7 positive breath days only averaged 3.33 to 1, lower than the first segment. The next segment in here of 6 days, 2.47 to 1, and then this last week, 5 days, 2.04 to 1. So you can see we're literally stair-stepping down as we're going up. We're stair-stepping down in terms of the strength of what's occurring underneath inside the market, okay, in terms of the strength underneath this. Okay, so that's why I say that I think that the market is getting exhausted. We've had a deep, deep retracement. And what is my expectation? I am looking for intermediate wave 3 to begin. Okay, so we're watching for that breakdown. So let's drill in and take a look real quick at the, actually I want to look at the 78-minute, just gives me a little bit different view in here. And this is what I'm talking about. And I need to get rid of this. That's better. And then I want to bring in some detail in here. Okay, so we know where we're looking at. So we had 5 waves down, and then we've had this zigzag back, ABC zigzag move. And I think in this C wave, the second leg up, I think we're doing an ending diagonal pattern. You could see the overlap that's occurring. The other interesting thing that's going on here is you can count 1, 2, 3, 4, 5, 6, 7 waves, okay? 7 waves from an Elliott Wave perspective is still corrective. So we have got a corrective pattern going on. It's weakening. When you look in here between this push between the 3rd and the 5th minute wave, we're getting a pretty solid divergence showing up on the RSI. So that is the picture underneath. You know, has it rolled over yet? Not quite yet, but that's what we're watching for. That's why we've got to rely on the prices to do that. So that's the picture there. I want to go back to the daily and then look at the put to call ratios. Okay, here we're back to the daily view. Let me bring in the put to call ratios. So on Friday, there were 53 puts for every 100 calls, and that is the lowest reading that we've had since 0.51. I think it was 0.51. Yeah, right here on February 20th. Okay. So where was February 20th? February 20th was right here near the top, near the peak. Move this in a little bit. Here's February 20th. And then we got a reading of 0.53 0.3 on Friday, and then on the 29th, we had 0.54. Now, it's interesting that on the S&P and the Dow, we have not taken out this April 29th high. So now the other thing that's going on in here is this segment in here that I've color-coded. I'm calling it rose-colored. And it's really, what have I done? I'm looking at the 10-day moving average in here between 0.6 and 0.64. Okay, and this started occurring April 20th, and here's April 20th. Okay, so let me see if I can highlight this real quick. So this is this segment right here. That's this section right here. What I have seen is that after we had extreme bounces, I'm going to get rid of this so I get my mouse active again. After we've had extreme sell-offs, like what we had over in here, okay, this was March 13th to March 24th. That's right here, March 13th, right into here, March 24th, okay? After we've had these kind of extreme put buying and sentiment, and the market turns and bounces, when we get into this level of 10 days, we're usually, or we've at least back in the 2008 move down, we were at the top of the rally, okay? So I find it really interesting that that's what we're experiencing right now. And if I were to go back, let me see if I can do that real quick. Let me take us back in time. Go back to the beginning of 2008. Okay, here's October 7th high. Okay, actually the October 2007 is what I meant to say. October 31st. You notice how the Nasdaq also seems to lag the Dow and the S&P in terms of peaking out. Okay, because the Dow peaked out a little bit earlier in October. And we had this 5-wave move down. And then the extreme reading I just talked about, where you get this kind of put buying like this dark green, that's what occurred right in this segment here in March 2008. And look at this one-day reading on March 17th. It was 1.34. That is the lowest reading I've gotten in 14 years worth of data. And this 1.28 that occurred on March 12th of this year, okay, that is the second lowest reading for extreme bearish activity with put buying. Okay, I'm making a little correction in here. I said this was the lowest reading, and you know this is not the lowest reading. This is the highest reading that we had. It happens to occur on the low day in here. That's why it's a little misleading. This is the highest put to call reading in 14 years that I've ever recorded. And over here, it is the second highest reading showing extreme bearishness that I've got recorded. Okay, this occurred on March 12th, 2020. Okay, just to clarify. So then what happened? We got the bounce up into here, and here's where we got that type of 10-day moving average. They got into the low sixes, like 6.62 to 0.64 type of thing. So now when we look at, this is what I want to, okay, hold on. Sorry about that. As soon as I start to adjust it a little bit, it can get real sensitive. So here's this same move. Here's what I was just talking about. Here's October 2007. Here we are, March 2008. Here's the bounce, right? After a 5-wave move down, we're into May of 2008. And then what happens? We roll over and roll down, and we keep pushing down. But here is the next 5-wave move down into November. Then we got another bounce, and we rolled on over down into March 2009. So anyway, first things first, focusing on this first bounce that we got, and it's the sentiment that we're experiencing right now is very, very similar. I'm not going to say it's identical. It's very similar to what we were experiencing back there in 2008. All right, so that's the put to call ratios. Let's take a look at gold. Okay, here's the long-term weekly chart of gold. I've talked about this many times. I think we had from the 2011 into December 2015, we had a 5-wave move down. And because we had a 5-wave move, that is the direction of the market. And so there we are looking to correct that first 5-wave move down. And because it's 5-wave and not 3-wave, I'm looking for a zigzag. So then we're looking for the first move back up, a B wave. And that B wave turned out to be a zigzag, although it got more complex. It's not really complete yet. And that's what we're looking for. We're looking for this to complete. We're close in here. Let's go to the daily view, get off the weekly for a minute. Here's what I think's happening. Right now, this is the bearish scenario. They're looking for this to keep coming down. Now, these are just placeholders. These are not meant to be predictive. I'm not saying wave 3 is ending exactly here or anything like that. I've just got placeholders so that I can put the wave counts in here back up into this box, this area. So what I'm looking for is we've been chopping sideways for weeks. Okay, it's been a little kind of a frustrating environment, honestly. And so here's the April 21st low of 157.04, and here's the April 14th high, 164.42. I feel like we're in a box. Okay, if we take out this low, that's going to confirm to me that we are in the bearish scenario already and that this is the high. But if we take out this April 14th high, okay, then that's going to say, hey, we are into one more leg up. We're into a 5th wave, and I'm going to show that in a second. Right now, where we closed on Friday is kind of almost right in the middle. So let's take a look at the bullish scenario. The bullish scenario says, okay, we are doing a 5-wave sequence and that we're trying to finish a 4th wave. Either we finished here or we're still doing some kind of sideways, maybe a triangle, something like that. It's hard to tell. But again, we're going to get confirmation when we take out that April 14th high and then we push higher. Then we'll be looking to see how did the wave structure look as we push up into here. I'm really not expecting it to go much above the mid 70s if it continues to push high like that. But first things first, it's got to push out of the box. Okay, that's it for this video. If you felt like the video was helpful, give it the thumbs up. And if you're not a subscriber to the channel yet, hit that little subscribe button. And if you'd like more of this kind of information, head on over to joehenches.net. Check out the membership. We talk about this kind of thing and into detail every day. All right, everyone, have a great weekend. Be safe, and we'll talk to you on the next video.